Topic for today is mortgage versus all cash purchase, and my name is Dr. Miralism Khalil. If you guys are brand new, just a little bit about me. I have been an investor for the past 20 plus years. I began when I was 15. It's actually amusing when I think back about it because I feel like I could have started earlier, but anyway, alhamdulillah. And I've been a stock market investor for more than a decade now. So this is a really important topic, and you guys are going to see why. Again, the disclaimer is all the information is for educational purposes only. No client relationship is assumed and no tax advice is given, even though I'm going to give you a really hot tax tip in today's class that I have learned over the years, but it's just available anywhere. But it's a good one. So intention and istiyada. A'udhu billahi minash shaitanir rajim. Bismillahir rahmanir rahim. Rabbi shrah sadri wa yassir li amri wahlul 'uqdatam min lisani yafqahu qawli. As usual, I pray to Allah that anything that is beneficial to you stays with you, and anything that is not beneficial to you doesn't stick to you. Okay. So story time. This is really and we laugh about it now. I'm laughing about it because of the way this client of mine reacted. So I had a client, she was referred to by somebody else, and she came to me. She was in her 50s, and she said, Miral, I have X amount of money and I want to buy a paid off property. I've never had a house of my own, but I want to retire and I don't want to pay mortgage on it, and I want to I have cash to pay it off completely. It wasn't something fancy, it was something that she could absolutely afford. And so I just asked her something. The first thing, I was curious. I was like, why do you want to spend all of your money and tie it to a house? She was in her 50s. Just remember her age. And she told me that, I've never had a property. I don't want to take out a conventional loan, and I want to stay within the bounds of Sharia. I don't want to pay a mortgage every month. She was so excited, and when I told her not to do it, she was so mad. And she was like, somebody recommended me to go to you because she said that she's going to guide you, but you're not practicing or you're not staying within Sharia. And this is the response I get every single time when I tell people not to, or think, when I tell people to pause and think about investing a huge chunk of money, basically tying a huge chunk of money in real estate. So hold your horses before you guys discount me as somebody who doesn't follow Islamic teachings. I want us to go through the whole presentation that I've prepared for you. And then we're going to come back with questions and concerns and comments and everything, okay? But listen with an open mind, all right? And this is going to answer, we had a consultation. So this was a paid consultation with her. And I went through the exact same steps. I mean, the only difference was that I took her situation, I took the money she had, and I explained everything to her. One of the things that I pointed to her first and foremost that is extremely serious, and you guys should be taking seriously, is that before you think that you can buy a piece of property and put all of your money in it, the first thing is that it's an illiquid investment, which means that you cannot sell a house tomorrow and get all of your money back. Even if you make a sale immediately, the money, it takes time for the bank to process it, for you to pay all your fees, and for it to come to you. So you are literally, it is called an illiquid asset, which means that cash is not readily available. All right. Except that you hit the jackpot and your buyer is an all cash buyer, which is very rare. So having said that, the second thing is that you need to consider having an emergency fund. This woman, despite the fact that she thought she was old and she was in her 50s, she had no emergency fund, which means that she was willing to put every single penny that she had in her bank into this account with absolutely no funds afterwards, maybe $1,000 or maybe $1,500 or something, which is completely unacceptable. You need to have an emergency fund. There's a separate class where I discuss how much money should be in the emergency fund, but just to give you an overview, you need to have 6 months of expenses in a checkings account, somewhere you can reach immediately, and those expenses include mortgage, health insurance, car insurance, cell phone, grocery, anything major that you can think of. 6 months of expenses, that money needs to be in your pocket before you think about tying all of your money in anything. Okay, so let's move on. So the interest rate, I'm going to talk about the economy today. I'm not going to talk about last year because last year mortgage rate was 3 to 4%. Right now it's sitting at 7%. If you're lucky, if you have a credit score that is below, I think, if you have a credit score that is below 700, I think it's even more than this. But this is the average interest rate that is available to the general public right now. So what does that mean for you? If you bought a $500,000 home with a $20 20% down and opted for a 30-year fixed mortgage at the rate of 7%, you're gonna pay over $600,000 in interest over 30 years. Okay, and so this is one of the things that freaks people out. But having said that, not everybody has $500,000 to invest in a house. I am friends with so many real estate brokers and agents, and they tell me that people do not even have the 20% to put down. If somebody's familiar with why you need to put the 20%, that's a separate topic, but it covers you. You don't need to pay the additional private mortgage interest, and it's a separate topic. But I'm just trying to tell you that it's recommended that you put down at least 20% so that you are not paying the PMI on top of your mortgage and every other thing that makes up your whole mortgage payment every month. But people don't even have that. So just to give you an overview, this is what you are paying. But hold on. Even if you have $500,000, I want you to consider everything else I'm going to talk about afterwards and see if tying up $500,000 in a house is in your favor or not. Okay, so a cash purchase. So everybody will always tell you that skipping a loan can save you a significant amount of interest, like we saw in the slide before, right? It's going to save you $600,000 in 30 years. Who doesn't want that? Nobody wants to pay a penny extra. And an all cash offer, when the economy is really hot right now, where the housing market is really hot, an all cash offer will always beat out other buyers. There are many reasons. The main reason is that nobody wants to deal with the bank. People want to save money. You save a lot of money when you go in with an all cash offer. You don't have to pay the lender fees, the underwriting fees, all kinds of headaches you are avoiding. So anybody who's selling a house will always prefer somebody with an all cash offer. So these are the pros of having an all cash offer. Okay, I want to mention these so that you guys don't think I am biased. All right, but is it a good move? So I want to ask you guys, before we jump into everything and before I just teach you everything, do you guys think it's a good thing to do? Would you guys, if you have 500,000 or if you guys have $1,000,000, will you buy a house with all cash? Anam, Arish, Farida, Lubna, Rania, Sabah, Shaza, guys, tell me, are you gonna buy? Do you dream of buying a house that is paid off? I want a house that is paid off. Arish, no. Lubna said yes. Arish said yes. Anam said no. Okay, guys, Lubna and Arish, after this class, I'm gonna ask you guys again, why do you think so? So you guys can put it in the chat. Lubna and Arish, why do you guys want to pay? Why would you guys want to pay with an all cash offer? Is it because you think, okay, not with the whole money, but something I can afford? Okay, Sabah, that is perfect. But there are Islamically approved companies that have a co-ownership model. I'm going to talk about it in more detail. Avoid interest. Okay, perfect. What if I could tell you that you can avoid interest and still buy a house, avail the mortgage payment, option, and it's Sharia compliant as well? Yeah, I would rather keep the cash to Shaza because cash is king. Like my husband and every other investor will tell you, cash is king. Um, as an investor, I will tell you, certain amount of cash is king, but anything that is invested and that is growing is king. Cash in the bank is not king. It's actually decreasing in value because of inflation. Okay, let's move on. So here's the thing. I know. My husband is of the opinion that cash is king. Okay. So, full financial picture. So, we have to discuss the before and after of how paying in cash. I am so sorry, my hijab. Okay. Okay. So, discussing the before and after of how paying in cash would affect your entire financial picture, which includes your future retirement needs, your current cash flow, and your investment portfolio. Guys, listen, for an average earning person, I am not talking about people who are making millions of dollars in passive income. We are talking about people who have average incomes. In fact, if you have heard anybody, the rich get richer because they're using debt to make themselves even more wealthy. So what they do is they are using loans from the bank, and they're getting wealthier and wealthier and wealthier. And there's a reason for that, because they know how to use debt um, wisely, and that is investing in assets and not in liabilities. Majority of people who live on, either paycheck to paycheck, or they have a lot of credit card debt, that is the average consumer, like people like you and me, are putting money towards liabilities. I like designer shoes, um, but I also know that they are a liability. They're not an asset. For a wealthy person, if I put on my investor hat, um, I'm going to spend money only from the passive income that is coming, which is the return on my investment, and I will spend it on anything that I like. But anything that I'm taking a debt for, I will only use it in an asset. Do you see the difference? So I'm not going to use credit card debt to put me in more debt for something that is not going to increase in value. This is what the average consumer is doing. uh, Investors use the money that is coming from their that is coming from their investments, which is called passive income, and they are using that money to buy all the luxuries, and they're using the debt to create investments and not liabilities. I hope this is clear. So you need to take a full look at your financial picture. Just because you have $500,000, you inherited it, you came upon it, you won in the lottery, somebody gave it to you, that doesn't mean that you're going to put all of that money into an illiquid asset, which is a house. Just because simply you need to look, if you have emergency funds, you need to have an investment plan when you retire. And you need to look at your cash flow. This is extremely important. A lot of people inherit a sum of money. They do not have any cash flow, and they're just looking at the security of having a house, but the house comes with a lot of expenses, and if you don't have the cash flow to maintain it, it's a really bad investment. I am going to tell it to you straight up. It's a bad investment if you don't have the cash flow, if you don't have emergency funds, if you have no plan for your how you're going to retire. If you Because here's the thing, as we get old, we are also thinking about medical expenses. We're also thinking, if you have kids, you should also be thinking about helping them get a head start. So you need to take a full picture. I'm taking a lot of time with this particular slide to tell you, or get your brain thinking about all the things that you should be thinking about before you literally freeze your money in one single thing. And so, how much cash will you have post purchase? Again, are you putting in every single dime into this house? I promise you, there is a lot of maintenance that goes in a house. everybody who owns a property will tell you that this is not the kind of investment that is one and done. If you have a house, there's a lot of upkeep in the house, especially if it's a house. The first thing that people get into credit card debt, which is, I have spoken to so many furniture shops and they're going to tell me people buy a house and they get into credit card debt to get furniture for the house. The furniture for the house is a liability, guys. It's not an asset. It's a depreciating commodity. The resale value is absolutely close to zero, until and unless it is old Victorian furniture, which is in the first place really hard to find and very expensive to purchase. And so, and all the maintenance of the house, if you have a huge garden, the upkeep, the HOA bills, the community upkeep, it's a huge money sinkhole. So just think about these things. It's not, it's not as hyped up as it's, you know, created to be. I just want you to think about all of these things before you make this decision, okay? So even if you have $500,000, $100,000, please be very careful about how much money you're going to put into a house, especially if that house is a primary residence. I'm not going to talk about investment property because it's a whole different ball game, but that is also in no way passive income. It's actually a lot of work to maintain a rental, and an investment property, and you're 100% responsible for it. We're not going to go into this, but just think about all these things I'm telling you. Okay, what else are you doing with your cash? You want to think about all the ways that your money can be more profitable than putting it in the house. So I am an investor. I invest in the stock market. I am a farmland investor. These are things that are more, I also invest in gold. So there are many things that I'm investing in. And when I think about sinking or freezing, God, $500,000-$600,000 in a house, I just cannot I cannot do it. Why? Because it's tying up all of my money that can make me money, provide an income stream. Potentially, I can sell other things quickly than the house. I just don't feel it's an ideal way to spend your money. So again, think about all the ways that you can invest the money in other places, all the things that I've mentioned, which can actually create an income stream from you. If you are not renting out your house, which most people don't out of privacy reasons and other reasons, you are literally tying money into a liability. It's not an asset. At least it's not going to be an asset for you. It might benefit your kids, but think about all the times where we have to sell a house, we move, kids are no more interested in the area loses its value. So you just think about all of these things before you make this kind of a commitment, okay? Again, will you ever move? Tying $500,000 into a house and then you have to move. I'm not just talking about military. I'm talking about if you ever choose to move from a state for a multitude of reasons. You got married, your kids want to move out of state, and you want to downsize. There are so many things. Do you think paying upfront $500,000 for a house that you're going to ultimately sell and not for that much more, is that going to be valuable? So a lot of people tell me that after 30 years, this house is going to be this value, okay? And who is it benefiting? It's not going to, mostly real estate doesn't benefit the first generation that buys it until and unless it's an investment property. So just be very, very careful of what kind of life you're trying to create. Also, a lot of people talk about home security. If you do not have a cash flow, even in a paid house, you cannot run your day-to-day life. Do you see what I mean? Even if this house is paid for, I still need to pay for my bills. I still need to pay for my kids. I still need to pay the groceries. I still need to pay probably car insurance, property taxes. There's like bills, bills, bills everywhere. So think about this. If I tie up all my money in here and I don't have an income stream, I might end up selling the house because I can't afford it. You know what I mean? So just think about these things when you are thinking about, oh, I'm going to buy a completely paid off house. And so a lot of people don't know, but there are potential tax savings when you are on a mortgage, you know. And I'm not just talking about, I'm going to briefly touch on conventional mortgage versus the Islamic mortgage options that we have in the United States. And so please think about this with an open mind. Any kind of mortgage that you have right now, and also just let's be more inclusive and more realistic. A lot of people do not afford to buy a house if they cannot take out a mortgage, all right? And so this is a no judgment zone. For the vast majority of people, this is the reality of living in the United States, all right? I just want to clarify this because every time I have to police somebody who is shaming somebody else, and I just don't want this kind of energy flowing with us because it restricts people from, you know, getting to know other options that they have, that is Islamic financing. Okay. Mortgage interest can be deductible for mortgages up to 700,000, 750,000. So you have to talk to your tax consultant. I'm sure if a lot of people, a lot of you are, if you are already, if you don't do your taxes, if you hire somebody, you should talk about this. So it's a completely tax benefit that you get on mortgages. You can, not on the principal amount that you pay, but the interest that you're paying to the bank, it's tax deductible. That is only if you are itemizing the bill. And now it's getting technical. I'm just going to go a little bit into it because a lot of people do not understand the accounting language. I do because I speak to my tax accountant and I am interested in how they make my tax returns, and because I professionally consult with people. So numbers are my love language. They're not everybody else's, but it's fine. What do you mean when I say, what do I mean when I say itemizing a tax bill? It's simply when you take, IRS has hundreds and thousands of deductions that you can take. All of these deductions are, your accountant is supposed to know them, but I have yet to come across any accountant that knows all of them. Just for your information, just because they are accountants, that doesn't mean that they know every tax deduction in the book. They also have to consult the hundreds of tax deductions that IRS has, and they come up with hundreds of them. Hundreds of them are revised every single year, just for your information. And so they only upkeep with a few of them, all right? And so if you itemize, which means that if your tax consultant is looking at all of your expenses, and if you're really organized, and if you if you give them like a really good breakdown of your expenses, they can consult if that this particular thing is a deduction in your tax bill, which means it can reduce your taxable income. So mortgage interest is one of those things, simply saying, which can reduce your tax bill, which means that ultimately you pay less in taxes, all right? But this is only if you are itemizing, which means if you're taking these deductions, and if you're not taking the standard deductions, which most people do. Most people will take a standard deduction, which means it's a set percentage. They're not going to itemize their tax bill, all right? Okay, so where do I stand? Like I said, I am not a big real estate investor, and hence this is what I personally, this is my personal opinion. I would not tie up my money in an asset which is a sinkhole. Anybody who has a house, I promise you, will tell you that the upkeep of the house, the absolute repairs that never end, the decoration that all us women are guilty of doing, the updating of furniture, the painting, the power washing, the lawn, and somebody who has a green thumb like me, who's always gardening, always wants to buy new flowers. The house is a money hole. And it is not advisable, I personally feel, for an average earning person to put all of their money in that freeze, that their all of their money in that single illiquid asset. All right. And now we're going to talk about Islamic mortgage. So I don't know how many of you are familiar with it, but I think I did not even know about Islamic mortgage. Initially, I promise you, I thought it was a scam. I did not know how it works, but as I have worked with these people, I've worked with different kinds of Islamic mortgage companies, I've come to know that they have proper Sharia boards, and it's basically a model of co-ownership. And so my thing, when I was told about Islamic finance, I was really skeptical, because I was like, how do they make money? Nothing is free, guys. That is for sure. If you are not paying for something, I promise you are paying with your time. So if you think something is free, it's not. And if it's free and if you're paying with your time, you're paying with the most valuable asset. It's even more valuable than money. Your time is more valuable than money. Time is money. And so I asked one of these people a couple of years ago. I was like, can you please explain to me, how do you make money? And it was so simple that it blew me away. So basically what they do is they are co-owners in the house with you. And one of the people that are really active in Maryland DMV area are Guidance Residential people. I presume that company is really active. And what they simply do is they're co-owners in the house. For example, there's a $500,000 house and you pay 20% on it, which is what, 100,000. You own $100,000 in the house, and they own $400,000 in the house. And what you end up, how they end up making money is that you are essentially paying rent to them on to use that 400,000 portion of the house. So instead of saying it as an interest, it's a co-ownership model, in which if something were to happen to the property, they are equally responsible, and so they take care of it, and it's not riba. So guys should look into it. Obviously, I'm not a real estate agent and I don't profess to be an expert, but I think that their model is the closest one, which is also approved by many shura boards in North America, and that is a really good option for anybody who's looking to buy a house and doesn't want to tie all of their money in that house. I think it's an excellent model. Everybody should look into it. So one of the most interesting, remember in the beginning I told you guys that I'm going to give you a really good tip. This is a tax tip, and I'm not going to go into the details because it's a completely new topic. But please, if you guys have parents who have paid off their homes and they are alive, please, please, please do not let them transfer that house in your name. Why do you ask? Because it's going to create a tax liability. And I am going to discuss this in my upcoming episode. And I wanted to, this is, guys, probably the end of we are moving towards the end of the class. I went over time. It's close to 30 minutes, but it's fine. And so I wanted to announce that I don't know if many of you know, but I had a podcast, Muslim Women Invest, and I just relaunched it this weekend. It's a really valuable asset because I wanted to create something that has investing information on the go, and because there is so much investing news throughout the week that it's physically impossible for me to just email you guys every single day, this happened and that happened. I thought that we could create a podcast in which I can not only talk about um, where to invest and how to invest, but also talk about what's happening globally. For example, last week I really wanted to share with people that Airbnb, the company Airbnb, is now a part of S&P 500. In simple terms, Airbnb is now trading on the New York Stock Exchange as one of the top 500 companies in the world. It's a big news, which means that it has to be profitable enough to get that position, to be amongst the top 500 companies trading on the New York Stock Exchange. And I wanted to create a resource, which is going to be my podcast, inshallah, where I can talk about not only a specific topic, but I want to talk about, the investing news so that you guys know this is how investors are making money, by staying in touch with what is happening globally. This is how we are informed of which company should we be watching for, where should we be putting our money. And so, guys, I really want your review. This is the podcast. You guys can go and listen to it. You guys can click it. Let me know. The podcast cover was chosen by over 60 women. And so we came out, and this is the result of it. I hope you guys love it. What else? Any questions or comments are always welcome. This is my email address.